Uncensored live Q&A session. My name is Danny and I will give you the webinar today. The first question that we have here is what's the fastest method to withdraw? Now, we can obviously, let me just get one notepad here. Okay, now I cannot confirm specifically what will be the fastest method, of course, but we can make a quick comparison. So I would say, let's suppose we've got several options. Online paying method, right? We've got bank and we've got a card. So typically, let me put it separatedly. Typically, both of those will be equal up, let's say, from both. Actually, I'm going to put it this way. Both cards and online paying methods can take from 1 day to roughly 7 weeks, 7 days on average. Could be more, could be less. Wire transfer, and of course bank to bank can take from 2 days to even sometimes even 10 days on average. Again, this could be less, this could be more, this could be 3 days, this could be even sometimes even 4 days. That depends on the circumstances, but this is on average. This is on average, so I don't want to we don't want to commit to anything, but this is the range. Unfortunately, I cannot specify a name or anything specific to tell you what's the fastest, because I haven't made this kind of test. But I'm sure if you guys will try it by yourselves, you can get some nice, some interesting results. Okay, now the second question here is what is the P&L ratio and how to adjust it? Okay, that's pretty fair question we got here. What is the P&L ratio? So P&L equals profit and loss. P&L ratio the ratio between my possible profit to possible loss. Why is that important? Why is that important? This ratio between what I can, because in trading, I'm not always going to make profits. That's just the way that it is, right? I'm not going to get 100% profit all the time. That's just how things works. So basically, this ratio here, we'll take example. Let's go with the basics. Let's go. Oh, sorry. Let's go. GBP, USD. Yeah. And let's go with just a second. Hold on. Yeah, let's suppose that we're gonna go with a buy. Okay, I'm gonna go with a buy, and in this case, what I'm gonna do is I'm also going to, just a second, this is 200 pips. This will be also, let's take 200 pips. This is farther down, somewhere in here. And let's go with a buy. And then we're gonna, let's go for 0.1. Actually, let's go with one lot. and then we're going to increase by 100 lot, then we're going to decrease this by 100 lot. Okay, and then we're going to paste the values like this. Oh, sorry, that's actually going to go red, because in a buy scenario, what we want is basically, we want the value to increase. So of course, anything that I'm doing right now, guys, are not things that you need to do on your own, on your end. Yeah, I'm simply doing this to help emphasize the scenario here, just to show you. Of course, if you want, you can, but it's not obligatory in any way. So this is going to go green. This will be our profit area. This will be red. This will be our loss area. Okay, and we're going to jot down those numbers, and we're also going to bound the N3 to be a flat 1.3330, and then we're going to go 334, blend that out. We're going to go flatten that out, and then we're going to also do the same thing here, and we're perfect. So, and we'll write down the name of the instrument, and what we're simply going to do now, guys, is I'm going to explain it to you in a second. Take profits. So this is obviously what we're looking at here is a ratio of 1 to 1, right? It's pretty obvious. Just a few more moments. Okay, 1.330. Okay. Okay, and this is a ratio of 1 to 1, and this will represent 10% of our balance, right? Let's look at what's written in here. See, $10,000 balance. This is a demo account, and this is what we're looking at. We're looking at 10%. How can I confirm this is 10% of my account? What I can do is I can go possible profit or loss divided by balance equals factor times 100 equals exposure out of balance. Meaning, if I'm going to go 1,000 divided by 10,000, which is our balance, we're going to go 0.01. And if I'll multiply that by 100, we're going to get 10. Okay, so basically, this can be done very easily. We're going to divide 10,000 by, we're going to divide 1,000 by 10,000. Oh, sorry, just here, just by the decimal. And then again, if we're going to multiply this by 100, we do get the 10% of our balance. Amazing. Now, this is not, sorry, this is not always what we're looking for. This is not always what we're looking for, but this is why is this important? Why is this important to have this kind of structure when we check the ratio of what we can possibly gain or lose? Because of what we spoke about in the beginning. We're not going to get 100%. We're not always going to make profits, and it's good to have an idea of how much we can potentially lose. This way we can maintain harmony when we diversify, and we can, okay, let's keep going, and then we'll see how it goes. But this is the equation, guys, and you can of course keep it, you know, use it for anything else that you want. And it should work. So this is our first position. We're going to put here number 1. Okay, so this is position number 1. Yeah. Okay, now we're going to put here a line. We're going to use the same exercise. Don't worry, guys. We're going to adjust this nice ratio in a bit, but just a second. Yeah, that looks good. We're going to click here, then we'll split it to 4 charts. Now, second charts can be, we'll leave it gold. Third one, silver, maybe something else. We'll go with the with wheat, maybe, not what, wheat. And we got gold, wheat, pound, and in here maybe we'll have Nasdaq. Okay, so Nasdaq. In here we got some analysis going on. Right, with gold we'll use the same proportions. So again, we're gonna go with a buy since it's very bullish. We're gonna go with one lot, and with one lot we're gonna click on take profit. We're gonna enable also the stop loss, and then we're gonna extend this to be 50, and then we're gonna minimize this to be 20. Then we're gonna click here, make the execute when price hits go to a flat 35. And then we'll make this one, we'll make this one 45. This will be 40, 35, 25, and we are amazing. Okay, so again, we're looking at the same ratio, but this is not an issue. We're gonna fix that. Name of the instrument. So what we have here is gold, entry, we said 4,035. Okay, 35, yeah. And this gonna go, okay. And okay, so I'm just pasting what I wrote in here. I'm very, very sorry guys if I went too fast, but I really want to convey here a certain message and not to teach you, you know, any analysis or anything like that, simply how to work out the trading ratio. So this is what we're looking at. The third thing we're going to look at will be wheat. Click here. Wheat seems bearish, so we're going to go this time with a sell. Again, one lot. We're going to click on take profit, stop loss, execute when price hits. We'll keep it as 505 as a flat entry. Our take profit can be 495. And then our profit is going to be, our stop loss is going to be 515. Again, we're looking at the same ratio, but this is not an issue. We're going to fix that. Clicking on an entry, choosing 505. And then take profit can be, as we said, 495. Stop loss can be 515. Okay, and our last candidate is going to be Nasdaq. Clicking here on, let's have a brief look at what's going on here. Okay, so this seems we can maybe, yeah, let's go with a buy. It seems quite bullish, still has the potential, broke the resistance. It does seem bullish. And with Nasdaq, actually, let's go 0.1. And with 0.1, we're going to select execute when price hits, take profit and stop loss. Again, we're going to bound the entry to be 25,300. And then our take profit can be maybe $1 higher, $100 higher, sorry. And our stop loss can be $100 lower. This way, again, we're looking at the same ratio. But as I said 3 times already, that's not an issue. We're going to fix that. Entry is 25,300, and then we are going to paste it right here. And right there. This one go $100 higher. Of course, there are many ways for us to validate that those numbers are actually compatible with the analysis we're seeing, but we're not there. We're trying to convey the message regarding the P&L, profit and loss. Now, when we're looking at this ratio of 1 to 1, we obviously, let's write down a quick scenario here. If all positions are profits equals $4,000. If all positions are loss equals $4,000. This is scenario A. Okay, this is a ratio of 1 to 1, yeah? Okay. Now let's go with scenario B. Scenario B will be 1 to half, or 1 to 2, if you want to call it. And this way, we're going to aim to have half of the loss. that we have while maintaining the profit. So in here, we're going to click here on pound. We're going to click here on, did we take a buy or a sell? This was a buy, I believe. We'll put the numbers down. So this was our entry, right? And we're going to make it 250. Oh, sorry. This should have been here. And this should have been a flat. Okay, but this was one lot, I believe. And since we are with the buy, our stop loss will be underneath. And our take profit will stay the same. So this is another $100 higher than the 100 pips higher than the entry. Okay, so what I did here is I cut the length between my entry to the stop loss by half. So if in the first scenario we were looking at 100 pips difference, now that's going to be 50. That's going to be 50 pips when we have one lot leads us to 500. Since for every pip 0.01, every pip means 10 cents, and when we have 0.1, each pip means $1. When we have one lot, each pip means $10. This is why if it goes higher 100 pips, it does mean $1,000. And if it goes up 50, it means $500. Now, we're going to use the same exercise to adjust our gold position as well. We're going to click here on gold, click here on buy. And just a second, yeah. And in here, we had one lot as well. Our entry, we're going to take it, place it right here. Okay. Very nice, very nice, okay. And then we're going to click here on take profit, stop loss, same in here, you're going to go 45 still. Okay, and we are, let's see, yeah, okay. And in here, instead of $10 higher, we're going to go only $5 higher. But, okay. And yeah, basically we're going to write it down. Okay. And like this. And the last, oh, it's not the last. We still have one more to go. So we're going to click on here, click on sell, choose one lot, click here on execute when price hits, intake profit. This we had 505. This means that in a buy scenario, instead of having our stop loss $10 lower, we're going to make it half. We're going to make it, sorry, this should be 10. Okay, and in a sell, this should be 495, and we are great. Okay, so again, we're gonna also write it down. So in the wheat, this is gonna go, it stays the same. This one will be 510. And you guys probably after 2-3 times that I've already done the same thing, I guess you guys can understand what's happening here. We're gonna do the same exercise with NASDAQ. Click here, this one was 0.1. Again, we're gonna enable the execute when price hits. Just to rephrase for the beginners that are watching this, what execute when price hits is basically a pending buy or a pending sell. So if you're using MT4 or MT5, this is basically what this means. Okay, it's the same idea. What it does is it opens the position automatically when it reaches the value that we design. Okay, so basically when I'm enabling it, it allows me to choose a certain entry and I don't get the dynamicy of the markets moving and blurring my numbers. Okay, so the take profit in the buy scenario should be in a higher position. This way, we're going to have it $100. Oh, sorry, this should have been underneath. And again, the same thing that we did with the previous three instruments. Instead of taking $100 away, we're only going to measure 50. This way, we adjust the ratio to be 1 to 2. And now, this will be 500. And this will be what I wrote. So this becomes 2,000 now. Now, I want you to understand what we did here. I want you to understand what we did here. We have 1,000. We have 1,000 possible profit in each of the positions, and we have 500 possible loss on each of the positions. This means that if I'll multiply all of those, and all of those are making profits, my possible profit is 4,000. If I'll add all those 500s, I should have said to add and not to multiply, God forbid. Because if I'll multiply 1,000 and 1,000 alone, is not going to give us the same number. Yeah. So 1,000 and 1,000 is a million, not 4,000. What I meant is to add. If we add 1,000, 1,000, 1,000, and 1,000, we get 4. If we add 5, 5, 5, 5, this means we get 2, right? So basically, what I'm showing you. Let's take another scenario. Scenario C. Okay, and in this scenario, we're going to measure not if all, if half, and if half. So if half, that's going to look like this, and that's going to look like that. So again, we're looking here at the same ratio with different results. Now, if half is making profits, this and that is making profits, so we've got 2,000. And then this and that making losses, it doesn't make a difference which position is going to make profit or loss, because the possible results and losses is the same. This is why I've selected it this way, bluntly, to show you, to convey the message in here. So this is what happens. Now, if two positions here are losing together, equals to one position that I can make profits with. Okay, that's the idea here. So, and this is the idea behind having a different ratio to 1 to 1, because in here, see the first scenario that we did when everything was the same. When if we lose one position and we profit with another position, we're at the same spot. We're not going to make any profits. Our net profit is not going to be higher. We're still going to be square one. But if we use a ratio of 1 to 2, and as you can see what we're demonstrating in here, if we lost a single position and the other one made profits, we have made considerable progress. I hope that this makes sense. Of course, if there are any questions until this point about anything that I've explained so far, feel free to share with me. We're going to write that down shortly in our presentation. So what is the P&L? How to adjust it? The trading P&L is trading P&L ratio is typically percentage, or ratio is typically a ratio between our profits and loss, which we compare in the risk money management stage. Okay. Adjusting the ratio can take time and experience, and can vary depending on the strategy and the experience level. Yeah, so I'm not going to tell you if 1 to 1 is not good, or it's good, or 1 to 2 is good, or 1 to 3 is good. I'm just showing you here. I'm showing you here an example of how to use it, and you guys can do your own research and decide what's working for you the best way. Okay. It doesn't mean, by the way, okay, I'm not getting into that. Like I said, everyone can test it by themselves. How many positions should I open in a trading session? Okay, let's suppose that, let me also get rid of, you know what, let's keep it on the screen for now, because this might be pretty educational also for this question as well. So how many positions? Okay, so the best answer for this, let's put some options. Let's say 1 to 5. B will be 5 to 10. And then C, that's going to be 10 to, let's say, 50. And let's go crazy. Okay. Now, what do you think will be the appropriate answer? How many positions should I trade? Should I open in a trading session? How many? 1, 2, 5, 10, 12, 50, more. How can I know? So basically, that depends on my trading plan and strategy. Okay, if, for instance, okay, my goal is $1,000. Do I need 4 positions like this? Maybe. Okay, maybe. Because then I can split it to be 250, 250, 250, 250 as an example. I can also, as an example, aim to make 600 with pound, another 100 with the gold, another 100 with wheat. Okay, we're already at 900, and another 100 with Nasdaq. Okay, the way that I'm gonna divide it depends on a strategy and a trading plan. What if my target would still be 1,000, but I don't want to open 4 position, I just want to open 1? I can do that. We're not getting into diversification, if it's good or not, and how aggressively we should diversify. The question here is, how many positions should I open in a trading session? So the answer to that is as many as I need to get to my goal. Okay, now what does that mean? If my goal is 1,000 and I'm happy with the composition I have here, and I don't feel like I need another position as a plan B or something like that, this is what I'm going to do. I'm going to open another, I'm going to keep it like this. You know, if my position for the trading session will be, you know, something imaginary, let's say, you know, 50,000 or 100,000, do you think that a single position like this will suffice? Of course not. Of course not. So another thing to consider is to be realistic with the balance I work with and what I'm trying to achieve. So the way that I showed you today, how to compose the position and how to measure this trading ratio, you know, this should be able to give you, this should give you the tools of how to get there. But I'm not going to instruct you a specific number of positions or to justify to take more positions or less positions. What I think is, if you got a certain plan, you can stick with the plan, your strategy. If you don't have any defined strategy, you don't have any plan, of course, you can just go with your guts, but this is an entirely different thing. So let's suppose that we do have some guidelines, we do have some idea what to do with our, you know, what to do. So in this case, I would simply make it in a way to comply with my plan. You know, target 1,000, so I'll try and work out my way to 1,000 with a single position, with multiple positions. Okay, one more thing I would like to add. Okay, I will not open too many positions that I can't manage. Because let's suppose let's suppose that I'm going to go for the 50 plus in a single session. Okay, let's suppose that I'm trading 1 hour or half an hour even, and I'm going to open a position every half a minute. I'm going to click quickly. Can I manage this? I need to think, can I manage this? Can I do it the proper way with take profit, stop loss? Of course, if I'm scalping, entirely different thing. Then this methodology that I'm showing you here, I don't think that's going to work with scalping, because scalping is, again, it's something else. But let's suppose that we're going to go conservatively and not scalping or anything like that. So I'm going to try and maintain a number of positions that is reasonable. If I'm a super busy person and I know that I'm not going to handle 50 positions, I don't want to get tangled just to trade. Okay, so I think we can if we have guidelines, we can stick with the guidelines. If we have specific plan with numbers, we can stick with those specific numbers. If we have a strategy that to go along with that, and we can syndicate, we can divide, our goal to different positions, even better. I'm not sure if I'm supposed to tell you if diversify or not, but you can see the logic in here. Make a wise choice. So I'm going to write here, in the presentation, the answer. If I have a certain guidelines, trading plan, strategy, I will try to open positions specifically to get to my goal. If I don't, I will trade as many as I need. Okay, as many as I need. Everyone can interpret this, in their own minds. But like I said, you guys seen the logic. You can watch the webinar again and understand a bit better the context of what I said. Is it possible to trade with $100? I think that I can show you that it's possible. Just a second. Oh, sorry. I think I closed it. There we go. So I think that I can show you. See, if we are pointing at, let's go pound again, and let's go buy, and let's click here, and make it only a single chart. You can see that if I'll go 0.01, I can trade. Yeah, I can definitely trade. Let's again use the values from before. That's not what we're looking for. Okay, and this can go here. Let's go 100 pips higher. This one will be 100 pips lower. Okay, and then this is what we've got. So the margin impact is what determines the necessary amount for me to open a position. How can I know if I can trade an instrument or not? We can see that the price here, the value here for pound is 1.33761, and since the quantity, the currencies we see here is 1,000, so we go 1,000. So this is value of currencies. So this is, again, this is how much pound there is in dollar. Okay, we can see that the currency written first is always a strong currency. Okay, so in this case, we can see that we need $1.3 for 1 pound. Yeah. Now, how do we use this? Who knows? How do we use this? Anyone has any idea? So basically, when we're looking at the quantity in here and we try and compare it with the value, what actually happens is the value that we see will be multiplied by the quantity to give us the value. Okay, again, value multiplied quantity equals total value. So we've got value of currencies, GBP. So this is how many dollars we need for £1. So this is 1.33750. Let's just keep it like this. And then what we have, just a second, will basically be that, yeah. Okay, now what does this mean? And another ingredient here. So this is the leverage. What's the leverage is doing? Multiplies buying and selling. This means that the number in here is not the actual number that we need. This is the actual number that we need. Okay, because when we multiply it by 30, I can naturally divide the value by the leverage to know my margin impact. Okay, again, let's write it down. Value divided by leverage equals margin impact. So if we're going to try that, and we will just a second. We will divide 1,337, and we're going to go divide it by 30. This is what we get. Okay, I'm going to show it to you. So this is our total value divided by 30, and this is what we get. Now, the question here is it possible to trade with $100? So this will require me to use 45%, almost 45% out of my available margin to trade in case I would have 100. Yeah, we have 10,000, so for us it doesn't make a lot of difference. So for instance, if I'm going to go 0.02, I'm already at 90%. I'm 90% usage from my available margin. So if it's possible or not, it's definitely possible. We can all see it right away. To tell you if it's recommended, and we will have the same ability to diversify like we did in the beginning, or you know, to just even to trade the same instrument, just to take another position might even be difficult. So regarding if it's possible, it is possible. It is possible to find an instrument that we can trade with $100, although the smaller the amount is, the more limited we will be in terms of the size of the positions and the number of positions that we can trade. So like I said, just because I have the ability to do something, it doesn't mean that it's good for me. It doesn't mean that I'm going to make profits this way. Okay, so $100 is definitely something that is possible to trade with. I just show you, and I can show you another few times, but there is no point doing that, because like I said, $100 is not something that I would personally try to work with. The reason is I'm just going to be limited, and I won't be able to necessarily perform the strategy that I want to. And the first thing that I do before I go ahead with a strategy is to ensure that I can open a position. Otherwise, even if my strategy is great, but it's based on trading 0.25 with pound, I'm not there. Okay. Again, with this account I am, but with $100 account I won't. Okay. I hope it makes sense. Now, if we so this seems to conclude. They're all, seems like they're all changed to once. Okay, we concluded this bit here. and I would like to share with you some links if you would like to learn things more into depths. So this is the link here for the AvaTrade's education. I'm going to share it with you over the chat. This is where you can find even more dedicated tutorials to do certain things, to learn more specific things. And this link here for the help, for the FAQ and the Help Center is more generally for more official question regarding your account, deposits and withdrawals, or all kind of systematical things that you would like to know about the services or the website. Real account is just the way that it's written here to open a real account if you're still on the demo. And the Academy, which we added onto a website, and I'm going to show that to you. I'm going to show you that now. Okay, but before we get there, I also want to share with you the special promotion code, a Q&A benefit, for you guys to enjoy a one-on-one premium market review with your senior account manager. So this is a Q&A benefit. Just save the code and then give your account manager the code, and he will know what to do. Let me show you how to get there from the website. So this is where we are. The web trader is something we don't have to download or install. I'm just using it on the browser. We also have it in the app. It's called the AvaTrade Trading app. You can find it on the store on your device. And if I want to go back to the default screen from where I'm at, it doesn't matter if I'm here. It doesn't matter if I'm here. Oh, sorry. It doesn't matter if I'm here, is an example. It doesn't matter where we are. We can always click on the clickable icon on the top, and then it's going to direct us to the default page. Now, in the default page, we can see here there are menus to the left, and at the end of the menus, right here at the bottom, above the chat, you see you can chat with us or on the WhatsApp. Above the chat, we've got tutorials and Academy. So if I'll click on Academy, what's going to happen is it's going to take me to the Academy. If I'm going to click on tutorials, it's going to open the tutorials right here on the website with sound and with subtitles. Seems like it's taken a bit of time, or maybe we're modifying the section, so I won't be able to show it to you today. But definitely check it out later on. When you click here on tutorials, there should be a square here you can see in previous webinars, and then you can enjoy all the content that is there for you with sound and subtitles. Unfortunately, guys, the time is up for today. I do appreciate everyone who joined today, and I hope that today you acquired some practical skills that you can implement in your own strategy. You're all welcome to join us next week for another webinar. Until then, I wish you best of luck with trading. Have a fruitful week and have a good day.